Yo, what is good, guys? Welcome back to NextGen Wealth Tips. Today, we are talking about the top monthly dividend stocks for 2025. In this video, we'll explore stocks that don't just grow your wealth, but it also pays you every single month. So let's dive right. So before we start, I'm not a financial advisor. I'm not here to tell you what to buy, hold, or sell. I do a lot of research, and I personally make these videos to give you guys stock ideas, and you should always do your own research before putting your hard-earned money into it. So be very, very careful before investing in the stocks and make sure that you know what you're investing in basically. With that being said, what is monthly dividend stock? So let's cover the basics. Basically, monthly dividend stocks are unique because they pay dividends 12 times per year instead of the typical quarterly schedule. This consistently makes them perfect for anyone looking for a steady income stream, whether you're reinvesting or using the payouts for expenses. These stocks are a reliable option for many investors. So basically, you can just take the money out and just spend it daily, or it can just, you can choose to let it reinvest into the stock and just build your stock price. So that's something cool about it. But let's talk about the benefits. So why are monthly dividend stocks worth considering? For one, they provide consistent income, ideal for retirees or those looking for a regular cash flow. They also compound faster if you reinvest the dividends, and it helps your portfolio grow more quickly. Finally, with predictable payouts, it becomes much easier to plan your finance. That being said, we're going to be talking about the first one. So let's dive into our first pick, Reality Income, also known as the monthly dividend company, ticker symbol, I guess, O. With a stock price of around $60 and a dividend yield of 4.6%, Reality Income is a staple for monthly dividend investors. Its annual payout is $2.96 per share. The company invests heavily in commercial real estate, focused on retail and properties. With over 50 years of consistent payouts, it's a reliable choice for income-seeking investors. With that being said, since it's been paying out for over 50 years, this is probably one of the safest ones I got on the list that's going to consistently pay you out that $2.96 per share a year and 4.6%. So this one is probably the safest one in my opinion. We got other ones that can pay you more, but they're less consistent. But with that being said, let's get into the next one. So next up, we got Stag, specializing in properties like warehouses and logistics centers. With the rise of e-commerce, this stock is well positioned for growth. Its stock price is around $35 with a dividend yield of 4.1%, offering an annual payout of $1.47 per share. If you're looking for exposure to the booming logistics sector, Stag Industries is a strong contender. So basically, it just invests in the warehouses, and then we got the e-commerce stuff coming up. So this is one good thing about it. Next, our third pick is EPR Properties, a company focusing on entertainment, recreation, and educational properties. Its stock price is currently around $42, and it boasts a high dividend yield of 7%. This is probably one of the highest ones we have on the list, but we got some kind of like some devastating news, I guess to say, but translating to an annual payout of $2.94 per share. While it's a great option for high yield, remember that it's a sensitive to economic downturns, as entertainment venues can be a hit hard during recession. So if you get into a recession, your stock price might drop, with the dividend stock dropping too, because if the stock price is lower, your dividend payout is going to be lower. So with that being said, just keep that in mind with this one, but this one is a high payout dividend stock. We got a little sellout for y'all. Check out the two links below for two great brokers, Coinbase and Robinhood. You won't be disappointed. It's really easy to use and really user friendly. These are probably the easiest apps you can use on your mobile devices and computer also, if you go that route too. With my links, you can get free stocks and a chance to get a Bitcoin that's worth like 90,000 right now, 94. So go check that out. With that being said, we're going to be moving on to Pembina Pipeline. If I didn't pronounce that right, I'm sorry, but it's a Canadian energy company operating pipelines and processing facilities. Its stock price is around $31 right now, and a dividend yield of 6.4%, and an annual payout of $1.98 per share. This company benefits from a strong position in North America energy, making it a stable pick for those seeking to join the energy sector. The energy sector is pretty big, especially with AI coming out. You guys know AI uses a lot of power, so investing into the energy sector can be pretty dope, you know? That being said, the final one before y'all leave and bring my watch time down, we're going to be talking about Main Street Capital, a business development company investing in small and medium-sized companies with a stock price of around $40 and a dividend yield of 6.8%, which is almost as much as the one we had before, which is 7%. It provides an annual payout of $2.72 per share. Main Street Capital also occasionally issues special dividends, giving investors a nice bonus on top of their regular payouts. So basically, this one is one that I personally invest in myself just because it has a high yield and it doesn't really have the risk that the other one with 7% has, with like the dealing with the recessions and stuff like that. So with this one being said, you also have bonuses too, which is pretty sick. So this is one that I probably recommend the most. So check out this one. But next, we're going to be explaining how to choose the right ones. So look for a sustainable dividend yields of 3.7%. Analyze payout ratios and growth history and diversify across different sectors to reduce risk. But before we wrap up, unlike you did last night, here are some financial tips for investing in monthly dividend stocks. First, always research dividend safety by checking the payout ratio. High yield is attractive, but only if the company can sustain it. Diversify your portfolio to spread risk across sectors. Lastly, keep an eye on the company's financial health and market trends to avoid surprises. With that being said, you should always have a risk to reward ratio, and diversifying your account is probably the best way to do that. Also, having good research before you put your money in anything, that's what I recommend. But thank you for watching the video. If you found this video helpful, make sure to hit that like button and subscribe and share with somebody else that you think would benefit from it. And let us know in the comments which monthly dividend stocks you're considering for your portfolio. And if you have any ones that aren't on this list that you're currently invested in, let me know, because I can do my own research and maybe I'll invest myself. Thank you for watching the video. Smash the like button, subscribe if you guys are new, and have those post notifications on. We post videos like this all the time and stock market outlooks. So yeah, peace out, guys. Love you guys. Peace out.